Sure.
It was a good starting pitch, but
Test 1, 2, 3.
Chat, do you hear us now? Let us know, please.
Vahab is always on it, if I'm pronouncing that right. Thank you, Vahab. Okay, I will start from the top really quick. So welcome everybody to our final This Week in Crypto here in July. We are going to jump into many things. As you guys may have seen from the title announcement, NFTs and DeFi have shown a lot of interesting trends here over the past week. So I'm here with Maxim, our founder, as Dino's taking the week off. About midway through the stream, he will jump into some of those projects and give his take. I will give as much information as I can about Bitcoin and Ethereum, as always, as so much of this past week of stay healthy and everything continues to look okay from that perspective. And as always, I would like to remind everybody, we're not here to give investment advice. We may, hint at what our data is showing based on history, where prices tend to go based on the patterns we see, but we never are here to blatantly tell you whether we think markets are going to go up or down. Not what this is about. This is about showing objectively, from a fundamental perspective, what data historically indicates for the upcoming weeks and months. So with that in mind, we're looking here at our screener, as we always kick off the call with. We're seeing almost all, just a sea of green, with a few exceptions. The big loser from the top 100 was SafeMoon. Also, Hex had a down week after its big climb the last couple weeks. But other than, these looks like 7 projects or so, everything else here in the top 100 has been flying up the charts. Bitcoin over the past week, up 20% itself, Ethereum 13%. Obviously, as you guys know, Bitcoin hit that psychological new high point of 40K. That seemed to get a lot of people who were staying quiet very excited once again. And a lot of altcoins just in the last 24 to 48 hours was able to respond to that and start to fly up the charts themselves. Before that, kind of early to midweek, it was mostly just Bitcoin, right? And altcoins staying kind of flat and dormant. And generally what happens with these kinds of cycles is exactly what played out. Bitcoin had that big uptick. Alts stayed flat as people and perhaps bots were figuring out whether Bitcoin was actually going to stay up there or whether it was temporary. And after a couple of days of Bitcoin staying up there, altcoins started to fly up. And when a lot of people started getting excited and trading into altcoins, that's when Bitcoin started to stagnate and fall back down to 38.5K like it is now. So the question now is, where do we go? We had a few projects that flew, like Quant. We had Bitcoin Cash ABC, Perpetual Protocol, AMP, Luna, among others that really just surged. And if you have questions about some of them or just any project that you're currently invested in and would like to see more information on, as you've probably typically seen in our last calls, if it's an Ethereum-based project, we have a lot of data. If it's a non-Ethereum project, we're going to be a little more limited, but there's still some data we can show. And we'll try to choose anywhere between 2 to 5 of the projects that you vote on. Balresh here will put up a straw poll in the near future, and you guys can actually take a vote on what you'd like us to cover, and we will do our best to satisfy there. All right, so the first chart that I'd like to show off here on Sandbase would be our mean dollar invested age chart. And what this does is it shows the average age of the dollars invested in Bitcoin and Ethereum. Bitcoin is here in tan, Ethereum is here in pink. Generally speaking, when the line is moving down, that's an indication that investments are are becoming younger and younger due to either new money coming in or dormant investments beginning to be moved, therefore moving the average age closer to a lower value rather than rising, which would mean that those same investments are sitting in, the same place and aging, therefore going up. So we had a very interesting trend go on. This is probably, in terms of seeing when a bull run is ending, this may be my favorite indicator because what happens is during a bull run, we'll see, this tan line indicating Bitcoin's mean dollar invested age just declining and declining, meaning the average age here is getting younger and younger, starting at 235 average days back in January and getting all the way down to about 178 just a few days after the all-time high hit of 63.5K. And then notice even right around the all-time high, April 14th, it was starting to flatten out. We weren't seeing the same huge drop that we were seeing back in January, February, March, and early April. This was an indication that, the excitement and all of the FOMO was starting to dry up, or at least hitting that point where it can't continue to go at the rate that it was. And eventually we had this big collapse. The collapse, kind of froze up a lot of traders, flattened things out here on the line. We were actually kind of, if I were to zoom in, I'm not going to do it now, but this was actually a bit of a rise, and we weren't really seeing any extended rise at all at any point earlier in the year. And this was kind of the indication that it was time to take a little bit of profit, or at least de-risk, right? Because something like this ended up being right around the corner, and this flattening out had a lot to do with this price drop happening. So once the price drop happened, of course, we were already starting to see a huge rise in mean dollar invested age, meaning there was a lot of dormancy, freezing up, people just not being comfortable continuing to put new dollars invested in Bitcoin the way they were as prices were surging back in January to early April. But what's interesting is this: for the first time since early April, we had this big drop again. Beginning on around July 25th, we went from a mean dollar invested age of 227.6 days all the way down to 220. And that's significant considering we had this 2.5 month pattern of just dormancy and stagnancy because prices were kind of chopping. But unlike this rise right here, a lot of people got very excited about the rise that happened in the past week. 40K was a big psychological level that hit and allowed people to start getting excited once again. And it caused new investments to come in, older investments to start being moved. And that tends to be what churns Bitcoin or any coin's price back in the right direction if you're a bull. So it's going to be interesting to see where we go from here. I'll zoom in a little now. And we can clearly see this drop that's happened just in the last three to 5 days or so. Yesterday was the first time we actually had a little bit of a rise, but we can easily start to continue this pattern downward. And that would be the signal that we're going to have that second bull cycle really starting to kick in. It doesn't necessarily mean, that prices are going to surge now because of just this 3 to 5 day pattern, but it's certainly going to be a trigger to it. If mean dollar invested age continues its downward path, generally a very good sign that we can stay up here or just continue our path to 50K. It's one of the best macro indicators we have. Maxim, if you want to say a few words about this metric, feel free, otherwise I'll continue. But I know that this is one of the primary metrics you like to look at as well.
Midterm, yeah. I mean, I don't use it on day-by-day basis, just when we are trying to understand cycles of redistribution, which always happens, or happened so far in each Bitcoin cycle. Then we look at this metric, and it's indeed one of my top 5 favorites.
Yeah. So we'll keep... go ahead.
Yeah.
Sorry.
There is still a chance that we've seen the top. but we don't take it as a primary approach. We do want to believe that we'll see one more push to 65, and then that will be the final top. Beat 65, 70, I don't know, whatever. Like in the next few months. Yeah, but this MATIC is the one. Imagine we're in a situation when the market is pushing and we are like now 40 going a little bit down and breaking 15, and everyone gets excited. To deal with excitement, look at this metric. The moment we get to areas which we saw in May or even below, you definitely want to go out. Yeah, we were already very close. Our goal was around like 100 in investigation, in dollar investigation. We didn't get there yet. That's why we believe could go one more time, but it was dangerously close. Yeah. Midterm, whenever you have big portfolio and you consider in the whole portfolio of crypto, maybe like substantially 50% leave it for cash. This is the one metric you really need to pay attention to. Of course, there is like in general, if we get excitement, but general excitement measure, it's very subjective. This is very objective metric.
Yeah, I think a lot of it is going to depend on not only mean dollar invested age, but how much FOMO, really starts to kick in with us being at that 40K level, a little bit below it right now. But that might be a good segue for us to look at what the crowd sentiment actually is showing right now. It's going to reload here, so give it just a few seconds. But what we're going to be looking at is Bitcoin's Twitter sentiment based on sentiment balance multiplied by unique social volume. So balance is the ratio between positive and negative commentary according to our proprietary algorithm that looks at, when people start to say key terms like bullish and buying and very positive commentary versus bearish, selling and price going down, things like that our algorithm can pick up, doing our best to kind of detect sarcasm when people are joking and stuff. But our algorithm is actually quite good at finding how people's commentary is ebbing and flowing between positive and negative. And right now, we actually went into the positive, as one may expect when we hit that 40K range. I'm not going to zoom in because it's just going to start loading again. But you can see here in the very far right, we went from very positive and we're actually back down negative again. People seem to think that the 40K mark was now just a flash in the pan overall because of the fact that prices quickly dropped back down to 38.5K where we're at now. Many people are claiming that this is a bull trap and you got to be careful and just take profit, when we hit 40K. And that actually can be a self-fulfilling prophecy that will allow Bitcoin to rise back up to 40K and beyond. When people get overly negative or skeptical of a temporary rise, thinking, oh, that was just a fake out, it actually ends up being the opposite, and it becomes an actual long existing rise that can take advantage of smaller traders who are taking profit and becoming jaded in the markets, right? So when we see extreme levels like this, that's when prices really start to drop off. Like we saw on May 10th, May 11th, big drop here over the next week or two. We saw another one here. We had a temporary rise followed by another big drop. And then once we got super negative, like we did from late June all the way until mid-July, that was kind of a bottom indicator because people were all claiming, you can rebuy in the 20Ks. It's going to drop off hard, so don't buy yet. They were the ones who really got punished by this rise up to 40K. So keep in mind that the primary use of this metric is to indicate that the markets tend to fluctuate in the most unexpected way that the crowd is calling for. So when the crowd is overly bullish, prices tend to drop. When the crowd is overly bearish, prices tend to rise. It's not a perfect metric by any means. That's why we look at all of these different metrics combined together. But overall, it's a very solid and effective way of seeing how the crowd is ebbing and flowing between overly greedy and overly scared. And right now, we're not really in either. We're kind of fluctuating in a pretty tight range, close to neutral, but there's a slight skew toward overly fearful because the latest tick was downward and negative after this drop back to 38.5 after looking like it might just surge past 40K up to 45, people getting faked out and now being a little skeptical once again. All right, next thing we're going to look at is circulation. This one is pretty, I may switch to 7-day, but really quickly, I'll just show you that Bitcoin right here had its highest uptick since mid-May in circulation. Circulation is probably a top 3 metric when it comes to what propels Bitcoin upwards and downwards. Utility, being the amount of unique tokens moving from address to address, is a key cog in allowing any asset to move forward or start to decline based on how much people are actually using it. So Bitcoin circulation had this huge increase right about when the run to 40K started, actually a little bit before. And after that, you know, it's kind of stayed up here. You can ignore this current day, which is showing as July 29th, but we kind of have a 24-hour cycle. So this drop here doesn't actually exist. It's a partial day. We're going to have to see how it plays out. But looking at our NVT chart, this is basically circulation as divided by the current market cap levels. And for the month of July here, this latest bar, we actually have a very underwhelming month of circulation. The last few days, this one is of course the current day, so you can ignore it, but the last few days have actually been very bullish. The lower these hash marks are, the better, because that means the ratio of circulation is closer to where the current market cap levels should be, if you want prices to rise. So the last few days have been very good, but the last, the week before that, here showing the last 4 to 10 days on average, this was way high. And basically, this is how most of July was looking, way up here, up until these last few days where we got up to 40K. And just as we showed here with the mean dollar invested age chart, that's when this line was starting to move down, and that often correlates with what's showing on the NVT chart here. So July for certain is going to end in a red bar, even if we get a few more days like this. But it's at least somewhat of a promising sign going into August that we might start to be cracking this 5-month trend of bearishness. So it's very important for us, our Sandbase Pro users, to be keeping a close eye on this model to see if August kicks off with something that looks a little more green like this. And we can clearly see when it's green, that's when prices tend to take off. When it's a long stretch of red, that's when prices tend to stagnate. I find this model to be extremely accurate, especially if you look at it from more of a macro perspective, where whatever the current month is, if it's green, the following month tends to rise. If it's red, the following month tends to drop. So we'll keep you guys updated. Right now, with July closing with a red bar, it is more likely that August has a continuation downward. But keep in mind, this is a very macro indicative chart. And at least the last few days are starting to look more encouraging. So that's circulation. I do want to point out also Ethereum is not doing the same thing as Bitcoin. Ethereum is actually still quite low when it comes to circulation right now. And that hasn't changed even with the last 24 to 48 hours starting to look a little better, and Ethereum going back above 2,400 temporarily. On the NVT chart here, we're in semi-bearish territory. So it's a little bit better than where Bitcoin is for the month, but on the last few days, it's looking a little bit worse because Bitcoin's circulation has been getting most of the uptick. Ethereum has not followed suit, and most altcoins look like this too. Most altcoins are still in neutral to semi-bearish territory, just like Ethereum is here. So we'll need to see a little bit of an uptick going into August for us to be confident that, you know, another alt season is starting to kick off here. All right. Next up, we will look at, and by the way, Baresh, start to let me know in about the next 5 or 10 minutes whether there's some projects I can prepare for, so I can, you know, have the second half dedicated to answering those questions. So what we're looking at now is Bitcoin's daily active addresses, trading volume, and social volume. Maxim here has actually put out a great article about a year and a half ago about how these three metrics align together to really show some valuable data, especially when all three are moving in the same direction. And we recently had exactly that scenario play out. I'll zoom into just the last month to show what we saw, and we put out a great report about it on Twitter, where social volume, trading volume, and daily active addresses all had a huge uptick right before our explosion to 40K and a little bit above 40K. Daily active addresses here on July 25th hit a 3-week high. Social volume, I'll actually change it to 1 day to show you. This was a 5-week high, and volume, which I'll change to 1 day, also hit a 5-week high. This is significant. When all three of them move up this swiftly in unison, it's an indication that markets will likely move in that direction. So when all three of these big highs occurred at the same time, it was a clear signal that not only could we rise up to something like 40K, but actually stay there and sustain that level for at least the near future. And we haven't really seen social volume break down. Daily active addresses have kind of stayed high relative to where we were the past few weeks. Trading volume has dropped off. So that's a bit of a concern. And what we'll be looking for to sustain these 40K levels, or at least around there, you know, the 38 to 42K range, would be seeing all three of these metrics staying high and not dropping back down. You can ignore this current day because, like I said, there needs to be a 24-hour cycle before we see what these bars look like next. But as of right now, I'll zoom out to, I'll go the full last year. We're still very low relative to where we were during these all-time high levels, especially on the daily active addresses side. Look at where we are now. Even with that rise, this was the rise I was just showing. It's still very low compared to, you know, where we were for most of 2021. And if we're going to get back up to all-time highs, I can guarantee you that it won't happen and stay up there, you know, 60K plus, unless daily active addresses start to get back to these 1.3 million, at least 1.1 to 1.2 million daily active addresses per day outputs that we were seeing back then. Maxim, I know you love these three metrics too. So if you want to come in and say a few words on this, please feel free.
Yeah, I was just preparing the background some chat layout, and you know, new version come out, so I had to fight a little bit with setting up things.
Do you want to show your screen?
It's one was the moment we switched to a bit like DeFi in Ethereum. I'm not finished yet. I'm still preparing.
Okay. Yeah, no worries.
But it is. You know, if I compare to MMA and fighting culture, it doesn't have to be complicated to win the battle. Sometimes it's the simple things, but you do it good and right, and you stick to your simple rules. This is what can give you over time advantage. And the daily active addresses, volume, social volume, this is the basics, and quite often this is enough. We do look into many other things, and they, the more you learn it, they indeed give a lot of insights. But it's possible if you look too many things, see trees but don't see the forest. These three, they always tell you about the forest. Is network growing, stabilizing, declining, and how is it correlating with price? because always there are specific patterns, and in trading, what you basically trade in your brain is like recognizing some patterned behavior of the network participants, and it's especially important. This works much better in crypto markets than in others because it's all about networks and its participants. Daily active editors volume, social volume is perfect, and we saw some quite encouraging things. So we stay cautiously bullish, but I will show a few things which tells that there are some slight concerns.
Yeah,
it
I'll
looks
show
like
a few more charts here, and whenever you want to start showing your screen, definitely feel free to just jump on in.
Almost finished, yeah.
Yeah, no worries. So long story short, guys, look for DAA, social volume, and trading volume to all start to rise in unison as a very good sign that we can start reaching those all-time high levels. Again, we saw a mini version of it earlier this week, which gave us this propel here to 40K and above. But with trading volume breaking down, daily active addresses slightly sliding down, we're not there yet where we can just sustain 40K and climb. If it does happen, there can be like a temporary push to something like 45K or even 50K, and then there will be a big test to see if there's FOMO that kicks in and drives up these three metrics. That can happen too. But more often than not, every time we hit a new psychological resistance level, it needs to be followed by these three metrics kind of having a little bit of a climb that sustains itself. And this one kind of was a flash in the pan where it came up and then dropped back down quickly. All right, really quickly, I'll also show that our whale transaction count for Bitcoin did pick up a little steam. This was our biggest spike here on the 27th, or actually 28th, excuse me, that we have seen since July 16th. So around 12 days since the last time we saw this huge spike. Generally, this metric is a good indicator of a price direction switch. And I will actually zoom in here because interestingly, we see that this, I'll take off Ethereum here. This Bitcoin spike in whale transactions, which are the amount of $100,000 USD transactions in a given time period, this occurred right at the local top, July 28th, around 4 a.m. UTC. We got up to 40.7, 40.8K. A bunch of whale transactions trickled in. This is a way higher spike than every candle around it. And right after that happened, price kind of went down. It ranged for a little while, but eventually broke down. And you'll very often see this. Even this one back here, the even larger spike on July 16th, this was kind of the local bottom. And we didn't actually hit this price until prices were able to rise. So whenever these candles occur, whatever direction the price tends to be going, it will suddenly, or at least gradually, move in the opposite direction in most cases, especially if they're like in cluster forms. So if I zoom out to maybe the last 3 months, this would be a really good example here. We see a big cluster. These were the largest spikes in whale transactions over the last 3 months, and they occurred right at the bottom on May 19th. And we at least had this temporary rise in price. And then we saw another big cluster kind of at the tail end of it, followed by a big downswing. And ever since, whale transactions were kind of just getting smaller and smaller, and so on and so forth, what we tend to look for a price direction swing. This was kind of the biggest cluster spike we saw since then. And that was kind of an indication that there was some profit taking going on. Doesn't mean that prices can't continue to move up, but this was at least the signifier that prices probably wouldn't sustain 40K for the temporary because whales were doing a little bit of heavy transactions here, likely the profit taking scenario. And speaking of whales, skip that for now. Here we go. So this is our highly coveted whale millionaire tier. It specifically looks at Bitcoin addresses that hold between 100 and 10,000 Bitcoin in their wallets. These are, anywhere from, with prices at 38K right now, roughly, 100 Bitcoin would be about 3.8 million. And that goes all the way up to about 380 million in terms of the amount held in USD. So clearly, these are whales that have a major impact on where prices can go next. And generally, when they're accumulating, so does the price. When they're dumping, the price tends to go down. It's probably our favorite tier to look at to see true whale behavior and how markets will be impacted. If you go beyond 10,000, there are some addresses out there that are, exchange wallets, perhaps a few individual wallets, but those don't tend to behave in a way to impact the markets the way that the 100 to 10,000 tier does. And that's why we specifically look at this range. I will zoom it out first before going into what we're looking at right now. And you can clearly see that the whale addresses tend to rise over time no matter what. But when you see these kinds of dumps going all the way back to, the very beginning of the year when we hit a top of 9.05 million Bitcoin held by this tier, we had this big drop here, and that was indicative of about a week later, the market's taking a plummet, which is exactly what happened. And then going to the all-time high here, we had the same scenario play out. The whales hit 9.16 million or so, and then it started to drop off. And after about a week, or maybe even about 5 days, that's when we saw this big price drop occur. Another big price drop, or amount of tokens held by these whales dropped off here beginning on May 8th. And you had a couple days to react to the whales selling off before this huge price plummet hit. So we generally want to look for these drops because price tends to follow after a bit of delayed time, anywhere from a few days to about a week or so is when prices tend to drop. But ever since we got here, go ahead, Maxim.
Yeah, this is a very important thing to understand. Whales or general wealthy investors or big wallets, they feel comfortable buying into a falling market. They never buy the bottom. Yeah, I've never seen it. And they don't need to buy the bottom. Yeah, they just know, okay, this seems to be a good area to buy. And I think in Bitcoin, they started to accumulate around 40,000 and they keep doing it. And you will see it happens actually in almost any established tokens. In some smaller or more risky, there are different mix of participants. Ethereum, or most DeFi tokens, or like I will show the DeFi pulsing this as a proxy, they start buying into falling market. And the moment you see this kind of chart where it's, once you look at this time series, which is over a year, you can kind of recognize the trend. It was falling down and now it's changing. You can see it's accumulating. So you should wait a bit because, as I say, they never try to catch the bottom. They don't. It's not their objective. So you can wait, and it's up to some, I don't know, talent or skills or luck. If you or me pinpoint the bottom, but it's a sign you are looking for. Before this happens, no need to buy. The market will not recover. If I buy, or Brian buy, or Bugs buy, or you buy, whoever on the stream, it will not move the market. It's like we're nothing. Once the whales start buying, as you see now, it takes time to turn around the market. So before they start buying, don't do anything. Yeah, just chill. let's take vacation. But at the moment they start doing it, okay, yeah, this is where we should start investigating other things. And it's the same for all tokens. Yeah, it's the same for all tokens. Yeah, big money moves the market. There are exceptions, yeah, but I mean, I'm talking about the rule. Exceptions like iFi or community-driven projects back in 2020, and it still happens. But this is exceptions, and we're talking about as a rule, which we need to train us. Yeah?
Right. Yeah, it's from what I've seen looking at this tier, it's really those extreme moves that are really important to pay attention to, because those are the ones that really really impact the markets, like this one here on May 8th, where it suddenly dropped down. If you were looking at this chart from May 8th to May 10th, it was a clear sign that there was some profit taking going on that would likely negatively impact the markets. When it's kind of a gradual climb like this, you know, or something like this where it's ranging, it's not going to be a huge mover of the markets by any means, and prices can even move in the opposite direction that whales are behaving, because it's a generally small amount. But a huge drop like this, or a big climb like this, like the single day that happened between June 30th and July 1st, where it went from 9.06 to 9.12 million, that's 60,000 Bitcoin accumulated in just a single day. That was a pretty good sign that there might be a future uptick. And there was actually kind of a fake out here where it was sliding down, but eventually this uptick played a role in the price rebounding. And this here, this accumulation just in the last week between July 21st and July 28th, that was a nice justifier that as we were climbing, it wasn't going to be a fake out, and we might actually get to stay at that high 38 to 42K range for a while. So it's very important to see what happens here, right? Now that we're at about 9.22 million, which, by the way, 9.23 million was an all-time high. This is the most that 100 to 10,000 Bitcoin addresses have ever held collectively at one time. So now that we're up here, the question is, do we keep growing or do we start to slide back down? If we see a sudden drop off like this, pretty good sign that you'll want to at least take a little bit of profit because whales are likely doing the same thing. But if it still climbs, very good sign that we can stay at 40K, go beyond there. So it remains to be seen what comes from this, but whales are easily a top 5 leading indicator, especially this tier, to look at when deciphering whether Bitcoin will go next. Go ahead, Max.
No, that's correct. Mm-hmm. I wanted maybe to move on to Ethereum and like a DeFi, because I don't know, it's a kind of big amount of talks in social media now about NFT, because they indeed pumping, and it makes totally perfect sense from point of next potential a big thing for crypto. DeFi was the first one, now NFT, and eventually DAO, but DAO is actually part of many projects anyway. So NFT is by all definition is a cool thing for crypto. But DeFi and Ethereum, it's kind of getting and peak in the background, which based on data I'm seeing might be temporarily, or it's just reflections that highly speculative mining going NFT. VCs also now investing heavily in NFTs. So if I share now, let me see something. Max, wait, you were saying is there a request of what? Kono. Okay, we'll check on that. Then I will share the thing about the small chat layout I did, and maybe we can use it even for Kono. Honestly, I don't know this project. So is it now my page with some? Okay,
we can see.
Yeah. So now this is the 1 year. This is a 1 year chat. Okay, I'm showing here on the screen, but you also see chat. And there are many things, or a lot of time we can spend just on this chat. Network growth, how many new participants flow into market. The important for the moment compared to what we've seen in the peak, or even almost a year ago, the current growth rate for Ethereum network is relatively low. It's a kind of subjective. Now, what I wanted to show, how it looked like last time, let's say, before we really start pumping here. So I remember there were quite some interesting, we can see both daily active addresses and network growth, they go together. And in the beginning, in the beginning of recovery, there will be some kind of reluctance or people not aware what might come. So they more stay in a way. And you can see that there was some growth when the market pushed in September, and then it fell down. And actually, it fell down to quite low numbers back in October, right before or shortly before we start to increase. And Ethereum at the time was around 300. My goodness, it was the time. And then it started growing, and never fell down back. Yeah, it's like and keep growing these very big spikes more and more, especially when there's IFI distributions. Many things happened here. Now, what we're seeing is a very kind of similar picture if I take from here. So the network grows sometimes like here in June, sometimes very strong, and then goes down and goes down again and goes down again. And at the moment, it's not growing much at all. By itself, number a kind of low, and you could say bearish, but put into the right context, market recovered. Still $700 we go in the price of Ethereum, and network participants not yet answering to it. So it has two implications. One, it's possible, it's likely, let's say 50-50, we can go down and we can correct to again around, I don't know, 2,100. But this is exactly the pattern you would expect before the strong rise. Yeah. Crowd is not excited. Participants are reluctant to put into much in the activities. And you see it on all the metrics. Yeah, this was the okay, let's see. Again, last year. You see it on Ethereum. And I put here also actually in daily active addresses, we've seen quite a strong increase, but then it fall down again. And on this metric alone, you see that if even we fall down, the network stays on a relatively high level. It's the same like a year ago, almost the same as before we picked in April, May. Now, here's interesting what we wanted to see actually. It's a behavior of DeFi participants, and it's we took DeFi Pulse index as a proxy, where it's the easiest way for a normal participant to get exposure to the whole DeFi market. And you can see that despite the price was growing, because DeFi DPI DeFi index it reflects the set of I think 10 tokens. So it grows when the market grows. No one is buying, or the amount of buying is decreasing. There was some kind of redistribution at the bottom, so there was some increased activity, but generally speaking, it's quite low. Yeah, the very first time when we were growing in the end of June. Here, the crowd got excited when we grow. Let's see how much percentage we grow at that time. Yeah, oh, not bad. Indeed, the price increased 40%. So you see the activity of the network, it got very high. Of course, when the price goes down, it decreases. Then yeah, it goes 30%. But what we're seeing now, when even the price increased quite substantially, 37%. Activity of participants, they're not buying index. It's like going down and down. And this again, it's a good sign. It's a short term, could be not so good sign. So there is not enough pressure on the market. No one is really pushing the price. But from the behavior point of view, they're not convinced. They don't see it necessarily. It's not how it looks when we get to the ultimate top. On the ultimate top, we will see much higher spikes. And just to finish, okay, let's better take maybe the last 6 months. Yeah, this is a very interesting picture we saw. It's how different, again, behavior of whales or wealthy holders and small fish. The red line, okay, green line is the price, let's say, of DeFi sector. And the red is total balance of quite big holders, and the pink line is small holders. And you can see one picture is better than 1,000 words. The big holders started to accumulate from around the bottom, and they kind of flattened out, but they still keep buying a little bit. Not much enough, not the same way as we saw in Bitcoin to justify the further growth. It's again, it's a proxy, but it shows the behavior. They're accumulating a little bit. They keep supporting the market, but they're not pushing yet. So I assume they're now also quite heavily in NFT market. But still, they're buying. Crowd, of course, not buying, not doing anything. Actually, mostly dumped. The percentage is around now 90%, compared to 60% of more wealthy holders. So the market is held by strong hands, and strong hands, they can survive the pain. They can hold for a longer time. They're not so easy to scare. So in generally, when we looked and we were analyzing it maybe 3 days ago, I like this picture. It's almost ideal for maybe one correction and strong push, or maybe directly push up. Depends on some other factors. Good, this is what I wanted to share. And if interested, actually, I can make this chart layout as a public and share, be it in the stream or in some other ways on our Discord. And now there was a question, Max, what was the token? Can you go again?
KONO.
I don't hear you.
Oh, sorry, it's Kono. It's KONO. Konomi.
Konomi. What is it about? Do you know?
I do not
Konomi.
actually.
Reminds me economy. I remember this from 2017. So Kono active addresses. Oh, it's quite fresh. It's only for March this year, and it does not look okay. Let's see. Oops, I wanted to take only this time. Can I? Why? Okay. Let me do it in a different way. Somehow it did not work. Let me close everything. Okay. Okay, now awesome. This is very, okay. Now, someone who is on the stream should explain what happened in June. They did something, even though it didn't have any implication on the price yet, at least not yet. Let me remove this first because we need corresponding group. The price is super flat, yeah, and it's can be both. Can be accumulation phase, can be death spiral, can be anything. Decentralized money market on Polkadot. So maybe they move to Polkadot. Maybe there is not much activity on Ethereum chain. So the price is 40 cents. Let's say everything up to 10,000 kind of relatively small holders. So it means we take merge 1 to 10, 10, 10 to 1,000. Okay, this one we merge. It's a one group, small holders. Okay, well, they buy, they accumulate. Now, and then we take 10,000 to 100,000. Oh, they're doing the same. So who's selling? Big guys are selling. Good. Now, let me merge like really big guys. So it's almost like everyone is buying, except I think that was a group. Yeah, not exactly. Except one group. Which is holding like a kind of 40,000 to 400,000. So probably this is a kind of early adopters of VCs. This is typically there, even though it's the current prices here, right? And the price was much higher. Okay, so let's see some growth. How do we grow? and price, growth in price. Okay. And of course, if we're talking about new coins, you need to always pay attention when we're talking about new coins. This is where you can look into more complicated things because there will be like exits of the early investors and profit loss. Typically, maybe can even place together, but let's put it first separately. Okay. And the price here. Yeah, good. Oh, that's good. And we do price also here. Now we have our chart layout set up to analyze. So there were enough. Okay, there were enough good exits of early investors. Good. This is what you want to see. Okay. So especially this one. This was very good sign. So they exited. So they gave up and took the 2 to 5x because most likely they got too cheap anyway. Good. And here you saw some. Okay. Let me look this part. Well, it's not so big, but there were some. Okay, and then the last thing we look. I feel like a doctor, watching the patient. Very good. Doctor, what is good?
Give us the diagnosis, Dr. Max.
Yeah, exactly. Yeah, doctor. So interesting. This is never seen before. So let me see. Okay. Now the volume pattern is very healthy, no question about it. It grew. There was no divergence, just pump up all the way up. And network growth is also very good. Daily XFL is, well, non-zero chance we will keep growing. Now, but I want that someone, actually it's more than 50%, I would say. There's a good chance we keep growing. But I want someone, because people were asking, economy is money market on Polkadot. Okay. Money market on Polkadot. Money market. Now, Mohammed, you need to tell me a bit more. What do they understand about money market? It's like liquidity pools, similar. Yeah. And if it's network growth, I'm just saying 10, 60, 80. Okay. And the volumes, how much is it? We're talking about 1 million. Okay, it's about 2. And active addresses 200. Okay. So here is the diagnosis. Down here, ladies and gentlemen. It looks okay. If you are in the market, I would probably bet it can continue growing. Yeah, it's the picture doesn't look like this. This is a dead patient, and especially we saw very nice this first chart, net to realized profit loss and age consumed. What happened before when the price was growing? It's quite good one. So many of early participants, they left, and it shows on the chart. It shows like a network realized loss, but for them it was not loss. I assume they bought it cheap. There was always typically special deals. There is typically special deals. Yeah. What I would pay attention to at the moment. Yeah. If you are pro user, let me take it on this small time frame here. So the moment you see increase in daily active addresses, it should come at some point of time. As it was here, for instance, you see from July till end of, well, actually from 15th of June, the price was going down, but network activity increased and stayed on quite high levels. This is a prerequisite for upcoming price recovery. So you should look for it. At the moment, it doesn't look like, so I would expect it probably will fall down again. But the moment you see this pattern, that the network activity start growing, especially if it's a falling price, that will be a good sign. Yeah, and that will be the first chart to look to. Then, if you know better about structure of holders, can see or specialize here the specific groups and see when the more wealthy people start accumulating again. This will be the second sign. And once the price hopefully start increasing, the network growth should follow up. So as it did here, that was good. Yeah. So it should come together. There will be like confirmation. And if you see age consumed spiking, it's also good. It means those who were before, they want to leave, there is healthier distribution. This will be the things. I hope it helped. Unfortunately, I don't know much about this project. Otherwise, I would probably bring it into context.
Mohammed is mentioning in chat that it's more similar to Aave on Ethereum. So people can borrow, lend, stake native tokens that live on Polkadot. And it's also it also should supposed to have some cross-chain capabilities.
Okay, good. Yeah, good. I think it's enough as a topic to bring some. It's pumpable.
Mm-hmm.
It should be pumpable. Sounds good enough.
We have MATIC as another.
Yeah,
token.
Max.
Mm-hmm. Yes. Brian.
Let me share my screen again, if you guys don't mind.
Yes, please. I will.
Go ahead.
Yeah, I will also mute myself. We'll boil some tea because I think I'm finished.
Yeah, no problem. I thought it would be important to actually show this chart as a last topic on Bitcoin because it's super important. Bitcoin has seen a sudden massive drop-off on supply on exchanges. We won't actually get into the numbers because there's still a little discrepancy on what the exact numeric value is of percent of Bitcoin that's actually on exchanges at any given time, but the direction changes are accurate. And when we see this is actually the biggest drop-off in a 1 to 3 day period that we've seen all year. It's really significant, and I should have brought it up earlier in the call, but we don't see drops like this very often. It clearly showed that this rise to 40K gave traders a lot of confidence that they could just tuck away their current Bitcoin stash in their cold wallets and not plan on selling it off. This is a drastically good sign for bulls because when funds are being moved off of exchanges, it is an indication that there is less risk of another massive sell-off occurring. And the last time this big of a drop-off really happened, and it actually wasn't quite as big, but it was at least the most comparable that we see, was back in late October, where we were, going down, it looks like almost 0.5% in a single day. And this occurred right when things were kind of flat here. And look at what happened shortly after. We had this huge run up going from 13K to about, give or take 18 to 19K in the span of about a month. That doesn't mean that we're guaranteed to do the same thing here, but this is a very bullish signal because of the fact that there's just less risk of a sell-off happening when you see such a massive uptick in coins moving off of exchanges like we're seeing now. I'm also highlighting supply on exchanges for USDT. This can be a bit misleading because USDT always has cycles of injections of new coins being moved onto exchanges that are irrelevant to user behavior. But we do tend to look positively when there's a big uptick, like we saw here. This was the biggest uptick of the year that occurred in early February. And right after this occurred, there was a major climb. Right now, we're not really seeing any huge upticks. This one was the closest we had in more recent times, and it didn't really impact the markets at all. But if we see an uptick in USDT supply, especially in the next week, while Bitcoin supply is moving off exchanges, that would be a major bullish sign that you guys can use your Sandbase Pro memberships to pick up on and react to instantly if you see that happen. So for now, pretty good sign. If we see the pink line suddenly jump up, very, very, very good sign. That's all I wanted to say. I think Max is getting some tea, but if he sees it and wants to make any other comments on it, he can feel free to do so. Otherwise, Balresh, yeah, go ahead.
I see. The only thing that because of Coinbase and probably Binance organizing the cold wallet, so we see this drop. I don't know how fast we will adjust the data to reflect it, but still, it was before that for quite some time, declining exchange supply. So you can see the trend.
Yeah, absolutely. I mean, it really hit its top right at the price bottom, and a lot of people here actually began to move their remaining, I shouldn't say remaining coins, but their lower valued coins off of exchanges, and this eventually is where we ended up. So this is probably our biggest slide I've seen since, mid-October all the way to early November. And when that happened, as I said, major price climb. So a good thing to keep an eye on, especially if it stays down here going forward. If it rises back up and USDT supply doesn't move up, that might be a sign that this was a flash in the pan, but keep a close eye on it. Balresh, for the last 15 minutes or so, if you have any other projects that people are requesting, I'm happy to jump in. I know I heard MATIC. Were there others?
No, I think MATIC is the one we can go with. Polygon.
Sounds good. All right, so MATIC here. Let's see what we're looking at. Actually, just do it this way. So MATIC, we'll start with address activity, which is generally the first thing we look for on Ethereum-based coins. MATIC's daily active addresses, or hourly active addresses in this case, is not really doing anything exciting at the moment. We've been seeing a pretty big decline ever since mid-June, when prices for all altcoins were beginning to drop off here. We're not seeing any signals on the active addresses side of things that should indicate that we're about to make a big bounce. There could be a price bounce and then active addresses follow, but in a vacuum here, looking at this chart, it's probably more slightly bearish than bullish on the address activity side. If we are to add our other coinciding metrics to active addresses, we see that social volume isn't doing anything special right now. It's staying low. Trading volume.
But there's a kind of good sign. Social volume is quite stable and it's not too little.
Yeah, that's a good point, Max. So what he's saying is we aren't really seeing a huge uptick that would indicate that people are starting to FOMO in with the last 24 to 48 hours being really good for altcoins. It's staying down, and there's not a lot of crowd recognition, which can allow prices to rise again. And then trading volume, kind of the same thing. We had a few minor spikes, but nothing special happening here. So based on these three primary metrics, really nothing out of the ordinary. Especially active addresses, we would need to start seeing a rise again in order to be confident that MATIC is going to decouple and go on another huge, rip, as it was known for doing earlier in the year.
Or alternatively, look, if what is the price for MATIC now?
MATIC is currently at $1.30.
Okay. So let's say, how is the behavior of the group which has 10,000 and then 100,000 and above? I want to say.
Yeah, good question. Let's check out supply distribution.
By balance, yeah. Then so actually, if you press Control and then one line, it will select only one line.
Aha! I never knew about that feature.
Yeah. There are some a lot of hidden features. Okay. Anyway, select. You can select as one group. Press Merge. merge and then select small holders, like 1 to 10, 10 to 100, 100 to 1,000. Yeah. So this is one group, like really small holders. Good, as you expect.
Massive.
They accumulate, but nothing happens. Now, big players. And I would split them into two groups. First one, just 10,000 to 100,000. Yeah, it's actually just them. Yeah,
by itself. Okay.
Yeah. Okay. Cool. This is a relatively smart money, so they're actively managing and they know what they're doing. And then everything, the rest, merge, whatever. 100,000 to million and million to 10 million, even though I don't know who has 10 billion, my goodness. But okay, maybe there are some. Most likely it's Team Wallets. Okay.
By the way,
so
Maxim, when you say that the red line here, 10,000 to 100,000 is the smart money, what makes you come to that conclusion? I know a lot of people are always curious which tier we pick out as the one that's going to be most price leading.
Okay, smart money, it's maybe too optimistic. I mean, this is the ones who have enough money to consider either been lucky or they know what they're doing, and at the same time enough money to care about. Because if I have in some coins, I don't know, like 10,000 or 5,000, and then some others like in the portfolio 100,000, while I would rather, obviously I would care about 100,000 more than about this 5,000. And I would pay very close attention. I will try to manage in my expectations, and I will probably leave, put price on it. You will see they started to leave before the top. I'm pretty sure about it. I don't put a price on it on this chart.
Yeah, let me overlay that.
They started to leave somewhere through the middle of the rally. Typically, they should behave like this. Yeah, this is an increase. Make it full screen. So you see, they started to leave early. That's why I say smart money is a kind of way you describe a group of people who know how to make money, but doesn't mean they exit at the top. No. They just made their 2-3x and they leave early and they move to net project. And you see they keep like exiting through the whole dump. Now they are buying or they're stabilizing again. Okay, and the big group is buying. Yeah. Ideally, I would like to see increase again or decrease again in this in one of this group, quite strong decline. It would show that one of them give up, and it's like a perfect enter into the market.
Yeah, ideally the pink line, right, Max? Because the smaller traders, if they were to exit, that would be a good sign.
That would be a good sign, yeah. So I don't see it yet, but again, smaller traders don't define the trend.
Yeah, the small line back here in late April, just this tiny decline. Look at what happened right after they sold off.
Yes. So I would wait. I would wait till we see a knick into their holders, smaller groups, because it means they give up on MATIC and they move to, I don't know, NFT or some other things. And this is exactly where the market starts recovering. Wait probably for small nick. I mean, it looks small here, but if you increase the resolution, it was, I bet 1 week, it took 1 week maybe. I mean, the one which you showed before, which was before the real final push for the price took place. Yeah, but anyway, you see the still accumulating. We should see decline here. That would be a very good sign of small traders, small holders. Once you see decline them, this is where you can come into it.
Mm-hmm. Yeah, it's an interesting thing to keep an eye on. I love looking at smaller altcoins, whales, and how they're performing. And as Max said, you know, those kind of larger but not absolutely massive whales can end up being very good price leaders because they're not quite the exchange addresses that don't really react to prices, but they are the ones who are very sensitive to the major price fluctuations. And it shows that, you know, people are kind of slowly showing signs of accumulation, but if you see, you know, especially that mid-tier begin to decline and sell off, that would be a sign of capitulation while we're still kind of down compared to where the all-time highs were. And the capitulation from those mid tiers are really the signals that it might be time to buy, because the whales will scoop up from the mid tiers.
Small. Mid, it's a kind of
1 to 100, yeah.
Yeah, exactly. So small goes down, and then mid or bigger one goes up. This is the moment you think, okay, good. I follow big money. If you want to follow big money, this is how you do with Sunbase.
And I'm also checking out circulation. Go ahead, Maxim.
No, there are just secondary things like CoinEdge consume can spike, or ideally you see network profit loss, like going shortly and sharply to negative. It means some who bought tokens or who are put into wallet tokens at a price which was higher now moving. So if you feel some pain, this is like secondary things. Decline on small holders balances, increase slight or strong increase in mid to big, and some like signaling on CoinEdge and network profit loss. This is ideal setup. And maybe it's a good idea, wait for ideal setups or close to ideal setups. There are some. Just make this chart layout for 5 or 10 tokens, setup signals. We have a button with these setup signals, and wait for it if you want to trade. Yeah, if you want to wait for it. Patience is rewarded. Yeah.
Absolutely.
Because you want as low risk and as high profit as possible setups.
Makes sense. Yeah, we're also looking here at the 7-day circulation. This is just a week-long average trend of token circulation, the amount of unique tokens that are moving from one address to another on the MATIC network. We can see here, whenever you get these big upticks, it generally is followed by a price rise. The biggest one, of course, occurred in late April, when we jumped up to here. This kind of happened in unison with a price rise. So a lot of people were reacting to the price rise and getting in. We saw a little bit of flatness, but because it was staying so high for 5 days or so, this was able to propel the price even further up. But ever since then, when we hit that all-time high in mid-May, it's been a huge decline in token circulation. And we'll really want to start seeing an uptick in that if we're going to see a rebound back up to those all-time high levels. Right now, really nothing going on. It's staying flat. And combined with daily active addresses staying flat, it's going to be up to the whales to try to trigger circulation getting high again by some sudden price spike like this that'll get the more small traders and novice investors to start paying attention to MATIC, and their FOMO can potentially drive up the price. But for now, it's down.
Circulation is a good sign. When you see it high, it's a good sign. Circulation is two-sided event. Someone is selling and someone is buying.
Right.
And it's good from both sides when circulation is high. If someone is selling, he means, okay, it cannot go higher. And if there are enough people think it cannot go higher, it's exactly what happens. It goes higher later. And the moment which you see on the top, when there was very low circulation compared to just before, just too many people got confident, and they got, it was for them a given, it will go high. So why do I sell now? And this is a market. Market never does what you expect or what the majority expects. So high circulation is good. If even the price crashes after this for some time, as long as we keep high circulation, it's good. And when you see high prices and then on the low circulation to go down, this means that you got locked. You're back. You have back to hold now.
Right.
There will be one chance, like here also in MATIC. In most coins, you have second chance to sell at a relatively good price, but not so many people use this chance, and it's a short one. And mostly happened in 3 days. And you see on the chart, circulation was even lower on the second chance to sell. They still think, okay, we're so cool, we'll go higher. No. Yeah, but this is a good point with circulation.
Yeah. So circulation, daily active addresses, social volume, trading volume, and then of course whale behavior. That's a really good 5 metric bundle to look at anytime you want to get a snapshot of a project, particularly an Ethereum-based project, because that's where we have all of the really great key metrics like whale behavior and daily active addresses. Okay, we're about 7. Yeah, go ahead.
Just to finish that, there are different ways how it's possible to analyze market. Not too many different, but a few things. And there is always, because our mind of humans very curious, and we like to feel or understand that we know so many things. Or like there might be desires, okay, if I can track specific 1 or 2, 3 wallets to like what they're doing. I would not do this. It's very difficult to understand the whole picture if you even track few wallets. You don't know what is the cluster behind it. Why is it doing things they're doing? I know myself when I do strategy might be complex enough. And but these metrics were shown, they generate the they show the general behavior of the whole participants. And this is what you want to see. You want to see pictures how the whole network behaves. And then split it a little bit, richer or not so rich, maybe exchanges. And that's enough. You will always do good things. Really stick to the, well, it's already not basics. I can assure anyone who is watching or now with us, 90% of people don't do it. It's not the basics. Well, we pretend to solve it's the basics, but it's way beyond what 90% of market participants even thinking about or deploy. So you will be ahead of the curve most of the time.
And it's easier said than done too. A lot of people know
that's for sure.
what you're saying, but they just can't bring themselves to do it because it requires a ton of discipline. Really being on top of the markets and sticking to a strategy without reacting, to big fluctuations all the time in price. It's hard. It's very hard to stay neutral and objective all the time when the price is doing something unexpected and you start to panic buy or panic sell. But what you're saying, Maxim, is totally true, and we've all tried to do it. But it's even here at Santiment, many of our staff members who do invest, we may see the metrics, but it's tough to actually react to what they're saying sometimes without getting a little trigger happy. So,
yep.
Very good, guys. Well, we're about 20 minutes after. Probably a good time to wrap it up. I did see someone ask about daily active address divergence really quickly. This is how we're looking. Keep in mind, this signal is very, very macro. So this is just looking at like the last 4 years of data and showing how daily active addresses are looking compared to overall price at that given time. And ever since we dropped from that big all-time high all the way down to the 35K range, we got into bullish territory. But take this with a grain of salt because it's a very, very zoomed out perspective. Over the last week to 10 days, it's been declining back toward very neutral. So this isn't really telling us much in either direction. This tiny red sliver here, that's the current day. So wait for it to play out before assuming that we're getting back into red territory. This is only working off of about half a day's worth of data, but overall pretty neutral right now. Nothing skewing heavily bullish or heavily bearish in either direction. Keep in mind here, this indicator did correctly call the bottom very well. On July 20th, we were literally at the bottom going below 30K for the first time in quite some time. And very, subsequently, prices rose sharply after that. So if we do see an outlier day, that's a pretty good sign. This was an outlier day in the negative direction where it was about to potentially go into red before prices dropped back down. And that's why it stayed as a bullish divergence, because prices were dropping rapidly while daily active addresses were kind of hovering and staying around the same here. So yeah, that's a quick update on that indicator for the individual who kept requesting that in the chat. Any other really pertinent questions that I could cover in like 2 minutes, Paul?
No, I think we're all good.
Okay. All right. For those of you who have more questions about other projects, we're happy to answer them. Just go ahead and transition over to our Discord in the general or Sandbase Pro channel, and we'll try and take care of you and give you some extra analysis. But I want to thank everyone as always. Thank you to Maxim, our founder here, for his time subbing in for Dino. And it's been really great, guys. Really appreciate you continuing to join us for these calls, spreading the word about This Week in Crypto to your friends and family. What you guys do with your likes and retweets and subscribes to our channel really helps allow us to continue to put out this content and keep you guys updated on a weekly basis about how we're looking.
Yeah, true.
All right, guys. Well, thank you very much. Enjoy your weekends.
Yeah.
Stay safe, and I will be talking to everybody very soon.
Yeah. Stay safe. Talk to you next.